We again have breaking news coming from UnitedHealth Group Incorporated. This stock has literally seen more breaking news than most companies will see in 5 or 10-year time periods. Now, if you aren't familiar with this stock, there's a couple of things you need to understand. Now, in the last year, it's down about 42.75%, but in the last month alone, it's down by about 29.57%. And I do want to do a quick recap of some of the key things that have pushed this stock down over the last year or so. So if we jump over to my Google Doc, to start off, as we probably know, Brian Thompson, who was the former CEO of UnitedHealthcare, was assassinated, and this ended up leading to increased scrutiny of the company's practices and really the healthcare system as a whole. But here's where things got even worse. In February of 2021, the company had the cybersecurity breach, which ended up disrupting some services and compromised some of the data. Now, the company says this will be a one-time cost, and if we jump over to the stock screener and look at UNH, thanks to ticker data, the data will load in, but if we come over here and look at earnings, we can see the company had a very clear track record of growing earnings at a high and healthy rate, and then in 2024 it took quite a dip. This was because of the one-time cybersecurity cost. So this was clearly a huge cost, but fortunately the company stated it would be a one-time cost. And then just a little over a month ago, we had the earnings report. UnitedHealth reported their first quarter earnings where they missed on top and bottom lines, which was a very rare occurrence for the company, and this led to another sell-off. And it wasn't much longer until the CEO, Andrew Whitty, had resigned for what he stated was personal reasons. But around the same time, the company also withdrew its 2025 financial guidance. Now, for reference, before they did that, they were expecting earnings per share in 2025 to still be above where it was in 2023. So the track record for growth was still looking pretty good. But obviously, investors hate uncertainty, so pulling guidance was not a good sign, and it led to a huge sell-off, nearly 18% the following day. But then the very next day, we had the report of the Department of Justice investigation into UnitedHealth Group's Medicare billing practices, contributing to a massive sell-off, and at one point, this stock was down over 50% in a single month. So if you haven't been keeping up with the stock, that's a lot of news you need to know. But it's important we point out, historically speaking, this company has been a quality compounder. I mean, if we look at the stock in the last 10 years, even with a massive sell-off in the last couple of months, it's still up about 150%, not including dividends, which, while we mentioned dividends, the company has paid out dividends and grown them at a high rate over the past decade. We can now see the company's starting dividend yield is sitting at about 2.8%, which is pretty much at the all-time high for this stock. Along with this, they've grown the dividend at an astronomical rate over the past decade. The 2014 dividend payment was $1.41, while in 2024 it was $8.18 and now $8.40. So the 10-year dividend CAGR is above 16%, and they're able to grow this dividend at a high rate because they grow their free cash flow at a very high rate. So really, all the signs of a quality compounder, a quality dividend growth stock, have been there historically speaking. So the question is, does this massive sell-off in the last month, even though there is a lot of bad news, does it create opportunity? Well, to start out, there's a couple of things that have happened in the last week that we do need to take a closer look at. To start out, take a look at the insider buying and selling history for UNH stock. Now, historically speaking, this stock has seen more insider selling for the past few years, but look at what's happened just in the last few days, in the last few weeks. We've seen 5 major insider purchases from people within the company. To start out, around 12 p.m. on May 16th, we saw 3 directors of the company buy shares of UNH stock. We had a purchase of about $100,000, $1 million, and then $500,000. So investors definitely took note of this, but then we had 2 very important insider purchases. The CEO bought $25 million worth of shares, and then the CFO later that day bought around $5 million worth of shares. For both of them, the average purchase price was around $290 per share. Now, the old Peter Lynch quote goes, insiders might sell for any number of reasons, but they buy them for only one. They think the price of the stock will rise. Now, these insider purchases were only a few days ago, but there's another place we can look to see what people with deeper insights are actually doing with this stock right now. And I had to do some research and digging to find this information, but we can see Congress's trades over the last month or so when it comes to UNH. Specifically, we're looking at all the different purchases. We can see in the last month or so, multiple different Republicans have been buying UNH stock. Most notably, Marjorie Taylor Greene has bought multiple shares in the last few days. In fact, she bought on May 14th, but then bought more of the stock on the same day that the insiders of the company bought. And then we have the single Democrat representative who bought shares on April 9th and April 15th as well. So that's information that should definitely catch your eye, but even in the last few days, there's been more negative news coming out surrounding UNH stock. To start out, we have headlines just a day ago or so. CMS expands audit efforts for Medicare Advantage plans in the US. Now, what does this mean? Well, the US Center for Medicare and Medicaid Services, which is the CMS, announced a major expansion of its audit efforts for Medicare Advantage plans, aiming to crack down on overbilling and recover government funds. And they're going to be auditing the payments for years 2018 through 2024. Now, this is a big deal for UNH because they're currently the largest player in Medicare Advantage. Now, according to the CMS, the last major overpayment recovery came from a 2007 audit, despite estimates suggesting that MA plans overbill Medicare by $17 to $43 billion annually. So what could the implications of this look like? Well, UNH could potentially be required to pay back past overcharges, and probably future billing practices could be more tightly controlled. The end result of that for UNH would be compressing profit margins. And for reference, if we jump over to my profitability sheet and look at UNH, what we can see is, historically speaking, the profit margins have been relatively stable, so a drop would definitely not be ideal for the company, obviously. So this news is definitely something to keep an eye on. But then the second headline that is more breaking news for UNH stock, which for reference, UNH has denied these claims, but The Guardian suggested that UNH paid bonuses to nursing homes in exchange for cost-saving practices that may have compromised patient care. Now, these claims come from whistleblowers, internal documents, and testimonies raising ethical and legal concerns. So either way, obviously quite poor for sentiment around the stock. So again, the stretch of bad news we've seen around this stock really over the past year is probably more than you're going to see from most stocks in a 5, 10, or even 15-year time period. And what we know about the stock market is, in the short term, sentiment is what moves stock price, but in the long term, it's earnings growth, it's free cash flow growth. And what the sell-off has done is it's led to UNH trading at its lowest price to earnings multiple in a very long time. For reference, if we look, we can see right now, the forward PE ratio for this stock is sitting at 13.2. The 5-year average is 20.61. That's 35 to 36% cheaper than it's historically traded. If we look at it on a trailing 12 months basis, we can see the PE ratio is 10.84, 5-year average 21.86. So based on the trailing 12 months earnings, the company is 50% cheaper than it's historically traded. So again, the questions we have to ask, is this a huge opportunity, or is this valuation multiple now justified based on future potential headwinds? Well, what we can do is we can really back into this and see what type of growth the market is currently pricing into UNH stock by using a reverse discounted cash flow analysis. So if we jump over to the ticker data reverse DCF spreadsheet, again, what we can see right now, if we assume no free cash flow growth into UNH stock, right now we'd come to a DCF price per share of about $249 per share. But the current share price is about $300. So again, the market is still pricing in free cash flow growth, which is something I would expect. But what we can see is if we plug in 2.2% free cash flow growth, we get very close to the current share price. So basically the market is telling us it expects UNH to grow free cash flow over the next decade at a rate of about 2.2% annually. That is dramatically lower than we've historically seen from this company. And for reference, if we just look at the earnings growth they've seen, jump over to my sensitivity analysis, what we can see is the compounded annual EPS growth rate was 9.75%, but keep in mind, that's still including the one-time cybersecurity cost. If we just looked at 2023 earnings and used that, we can see the compounded annual EPS growth rate for this company was close to 16%. And what management has told us is their long-term goal is to be in that 13 to 16% range, which historically speaking, they have been able to achieve. And funny enough, what we can also see is if we take the average estimate from analysts for earnings per share through the year 2029, we come to a projected EPS CAGR of close to 16%. So management is expecting 16% annual EPS growth. Analysts are projecting that. And historically speaking, that's exactly what they've done. Yet despite this, the market is only pricing in 2.2% free cash flow growth over the next decade. Now, to be fair, what management has told us is free cash flow will probably decline a little bit over the next year. But even then, these growth rate projections look dramatically low, which typically is an indicator that the stock should be undervalued. So what type of returns can we actually expect from this company? Well, again, using the sensitivity analysis model, we can actually see what type of returns we can expect based on different scenarios. And obviously, I prefer to be conservative with my estimates. So the first thing we need to do is enter a future projected PE ratio. What valuation multiple do we think the company will trade at? And historically speaking, the average over the last 10 years is about 22.87. Right now, the trailing 12 months PE ratio is about 12.46, which is about 45.5% lower than the company has historically traded. So what do we think this PE ratio will look like in the future? Well, what we know about the PE ratio is companies that have higher projected earnings growth rates typically will trade at a higher PE ratio. The company is currently trading like a stock that would have very low earnings growth priced in. But again, I want to be very conservative with my estimates. Let's assume a future PE ratio of only 16. That's still considerably lower than the average PE ratio over the last decade. Now we need to project our EPS growth rate, and to start, let's get a baseline. What do we expect earnings to be for 2025? Well, the average analyst estimate is coming in at about $22.71, which is actually quite a bit higher than it was in 2024, but we have to remember that's because of the one-time cybersecurity attack. This earnings projection is still lower than what they saw in 2023. And management did indicate the other day it'll likely be a little bit lower than 2023, so I think that's a pretty decent estimate. Now, when it comes to our earnings per share growth projection moving forward, again, I prefer to be conservative, so let's go with the low end of what analysts and management has told us, and go with about 12.5%. All of a sudden, we can see why people are attracted to this stock, why members of Congress are buying, why insiders are buying, because by 2030, you could be looking at a total return of 118% and a compounded annual return of 13.9%. And again, this is with conservative estimates. If the company simply reverted back to its mean PE ratio of 22.87 and then was right in the middle of management and analyst projections at about 15%, you're looking all of a sudden at a 250% return by the year 2030, or a compounded annual return of 23.12%, and this doesn't even include dividends, which again, keep in mind, the starting dividend yield for the stock is now at 2.8%, and they grow dividends at a very high rate. So strictly from a numbers perspective, it's easy to see why this is an eye-grabbing stock right now. But I still want to be completely clear, this has become a high-risk, high-reward scenario. If the Department of Justice investigation found something very detrimental to the company, obviously all those projections could go out the door. On top of this, we don't know what the audit will look like for this company. Will they have to pay fines, or could something worse happen? The reality is, strictly based off the numbers, it's easy to see why this looks like a huge opportunity, but at the same time, investors absolutely hate uncertainty. And right now, this is one of the most uncertain stocks on the market. So this will be really interesting to follow over the next few months and over the next year. Personally, I own just a little bit of UNH stock in my personal portfolio, and right now it only makes up about 2% of my entire portfolio. So go ahead and let me know what you think of this recent news surrounding UNH stock, and like always, if you'd like to download any of my spreadsheets and also get access to the ticker data in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.